All right, well, welcome back for questions. We've got plenty of time for questions, so if you could raise your hand high. Oh, look at that. We have mic runners, so we'll get the mic runners to you all. And by the way, the whole team is here, and so Sandeep and I will tag team and probably just ask our team to jump in as well. So let's get started. Keith, I'll turn it over to you first.
Excellent. Thank you guys for taking the question, and thank you for a great analyst day. A lot of data points, and I know a lot of work goes into it. Maybe a question for Sandeep that I know that Sasan's going to jump into. Sasan...
He always has valuable things to add. So
always has something to say. Sasan...
That was feedback. Please, continue.
He gave us a big number out there, saying, given a view that this company at this scale could return to 20% growth. I can't believe he got Kim to sign off on that. That's probably the most impressive part of the analyst day. But you gave us a forward year outlook of 12 to 13% growth after we just did a year of over 15% growth, a year of acceleration. Help us kind of rectify the two. Are there items that we should be thinking about in the coming year that are like foundational investments to faster growth on a go-forward basis? Is it just conservatism? Like, how should we rectify those two data points?
Yeah, absolutely great question. And the overarching thing you should keep in mind is that when it comes to guidance, we want to make sure that it is something that continues to preserve the credibility we spend years building, right? So it is a very high confident guidance. What we are excited about is the momentum we have in the business. In the Global Business Solutions group, we talked about Mailchimp, so I'm going to put that on the side, and Marianne already touched on all the momentum we're building there towards a 10% exit. But the opportunity set and the momentum on the online ecosystem continues. On the desktop, there is a slowdown to low single-digit growth, and we've been sharing that over the last 3 years while we're driving the migration. So that's what you got to keep in mind. The momentum's continuing. On the TurboTax side, we're excited about the progress we made disrupting the assisted tax category. There are many things worked, but as I've shared with you, everything that worked, we have so much opportunity to be better. We did early marketing, and we learned so much. Now we're going to hone in on areas that work better and discard the areas that weren't as fruitful. We unlocked the local opportunity where we see people convert 5x faster when we show up local. And as you know, we are within 10-mile radius of 80% of the US population. But we really didn't unlock local until late in season because all this stuff about Google verified and showing up in organic search. So that happened late in season last year. This year, we're going to have the whole season of benefit, right? And lastly, Credit Karma. Last year, we built a seamless experience. To me, that's table stakes. What we want to share, what Mark and Arundhati talked about, was a bespoke experience. Hey, come here, we got your data, let's get your taxes done in 20 minutes, right? So that's where we continue to build upon the momentum. So, and similarly on Credit Karma, that business has exposure to the macro, but a lot of that result, the majority of those results were our execution, focusing on what matters most to our customers. So your key takeaway should be the guidance is high confidence, similar to the principles we had for the last several years. Secondly, the momentum in the business and all the key levers for future growth remain strong and is driving our optimism. And there are a couple of areas where we want to make sure that we're giving them the room to scale up in a healthy way. Mailchimp, international. And the last one, desktop, we've been transparent. It's done with the migration, so it's low single digits. It's a long answer to your question, but hopefully that unpacked the entire thinking that the management team took into the guidance that we provided you.
Yeah, super helpful. Thank you.
Alex.
Oh.
Hey guys, thanks for taking the question, and amazing spread today for breakfast. So just congrats to all your vendors.
It's all amazing businesses.
You guys came across very inspired today. I think a lot of us have watched a couple of analyst days in the last week, and our heads have been on a swivel. Inspiring in terms of the way that you're bringing all of this technology together to make it tangible rather than, I would say, fragmented and confusing. The guide for 20%, if you think about the pieces that get you there, it feels like the most aggressive part of that is that GBSG growth. That's going to have to be probably well north of 20% given the other parts of the business that are growing below that, likely for a while. When you think about the consumption element, the AI monetization element that you're bringing into the core, how do you stack rank and how do you think about the linearity of that growth in that business as we get to that 2030 number?
Can I answer that? We'll tag team up here. First of all, I actually appreciate you calling out our energy. We are inspired because all the pieces and parts have come together from just all the hard work of the team that was up here presenting and the many that are at work right now. So we feel inspired because just we're seeing the proof points and we see now what's possible. I would say there are really three things that would have to line up for us to accelerate growth from 16% to 20%. And all three things they go hand in hand. The first one is with all the pieces coming together with AI plus HI across the platform and really stitching our platform experience together, that's a consumption driver. You heard David Hahn stand and talk up here about although our money is 1.4 billion, growing 37%, the majority of our customers don't have any idea that we can help them with AR and AP. Same thing applies to payroll. So that's a real illustrative example of now truly being a platform for consumers and businesses with both AI and HI. We believe that's a huge opportunity for consumption of money, consumption of payroll, consumption of HI, which is our human experts. And human experts is a big deal because any of our businesses that use one of our AI-powered experts, the attach rate is up 22 points. And so that's one, we believe, significant growth driver that frankly is more coming versus in our numbers. The second is assisted tax market. We finally got to breakthrough adoption. $2 billion business growing 47%. It's all AI and HI. And we've got a couple of percent penetration. It's a disaggregated market, lots of mom and pop shops, all manual, and we've got incredible scale. And so maintaining, right, 40% plus growth there is how you get to 20%. And then third is mid-market. And you heard both Ashley and Mariana talk about this, but with the focus that we have on mid-market, now 1 year into Intuit Enterprise Suite, we're in the early days of even our commercial motions. So you sustain that for 40%. Those three things gets the company to 20% plus growth. That's our internal aspirations. It's, by the way, everything we work towards is how do we deliver these undisputed benefits that can sustain that kind of growth. And the thing I would just remind us of, it's why I showed one of the slides that I did. In 2014, when we grew 8%, and we were a $5 billion company, we didn't guide we were going to grow 16%. But today we are 4 times the size at 20 billion, and we're growing at double the growth rate of 16%. And we have a very clear path to what's possible as we look ahead. All right, Siti?
Siti Panigrai from Mizuho, another great Investors Day. Thanks to Kim and her team. I want to drill into the last point you said, mid-market. IES has now been a year. Could you drill into what have you learned? This is kind of a new outbound sales. Now you have new general manager. So what have you learned, and what's your plan for this year, and what's baked into your guidance when you think about IES?
If I could start it, I'd love to hand it over to you, and Ashley would love to tag team with Ashley as well. I think a couple of things I would say. One, it's really important to once again recognize that we just launched Enterprise Suite a year ago. And with where we are with our innovation and with the fact that most of what we are launching is AI native, and becoming a system of intelligence, we're going to be able to really go across many verticals and verticalize into an enterprise suite so that if you're a construction company, if you're a real estate company, if you're wealth management, if you manage RV parks, that our system of intelligence can frame the KPIs the way you want it, the reporting the way you want it, the insights the way you want it. And we're just at the sort of the beginning of what's possible with our platform to serve many verticals within our base, which is where the majority of the TAM is, and then building capabilities to go outside of our base. So that's sort of one huge element, which is around what's possible with the platform. Because when you first launch something, you're in the nascent stage. we're a year in, and we feel like we've been at it now for 5 years, and a lot is possible now in the year ahead. The second is commercial. This is where, in a moment, I'd love for you to hear, from Ashley, which is, although we've been at this, building the commercial motion for a year plus with Intuit Enterprise Suite, when someone comes in that's built an enterprise and mid-market business, they look at that and go, wow, we need to build a commercial motion. And so that's a huge growth driver, as we look ahead. So let me pause on that because I want Ashley to jump in, but would you add anything before I turn it over to Ashley?
Yeah, a couple things, Siddhi. One is we think about mid-market as a holistic portfolio that's bigger than just IES. It's advanced in IES, and as I shared, it grew 40% last year, and as I highlighted, we expect it to be growing meaningfully faster than the top end of the 15 to 20. So I would take that in terms of your thinking. The second thing I would point out is doubling down on what Sasan shared. It's been in the market 12 months. I'll take you to our business tax, right? The first year you put something out in the market, you learn from feedback. We've never had a sales force. We had to hone in that sales motion. Does one person go out and sell the whole portfolio? Or does one person go and sell ERP and we bring in experts on payments and payroll, right? So these are all things we learned and evolved on. We just had a massive release in July, another one coming the next quarter. That helps unlock the accountant, and then you're not fishing with hooks, you're fishing with nets, right? So these, and the business tax is a good analogy, tripled in the second year, because we took the learnings from the first year, built into the second year. It'll scale even faster the third year. So that is a good reference point for you to think about how this management team leads. We get into the market, we learn, we iterate, and we accelerate. With that, I turn to you.
Great. So just to add, and through my onboarding, I have spent time with probably 100 customers and accountants since I joined. And one of the things that has really struck me is not just the permission for us to be the leader in this market, but the customers are asking us to be leaders in this market. You have to remember, these are 25, 50, $100 million businesses. They are trying to scale their employees, they're trying to scale their customers, they're trying to grow their business, and they want help. And they don't today feel like they have a strategic partner. They want Intuit to be that strategic partner. And it was really striking to me. There are very few times in my career where I've met with so many customers that just thank us for focusing in this area and making the investments in the platform to make their lives easier. They're raising kids. They want to make sure that their employees are, prosper, not just them, all of that. Next, what have we learned? The product has incredible value. And as I emphasized earlier this morning, our customers can actually realize that value quickly and easily. This is completely game-changing and different from the products that have been in the market today until now. And then importantly, as Sasan mentioned, there is a lot of progress, but a lot of opportunity left in our go-to-market. And this is everything from just the fundamentals of sales productivity, making sure that salespeople every single day, 5 days a week, are being as productive as possible as they can, identifying the highest opportunities in our install base and having great conversations with our customers. We're making phenomenal progress, and there's still a lot of progress left to go. The second is leverage in the model, right? And this is something that I could not be more excited about, is leverage, whether it be from marketing and then also from the accounting partnerships that enable us to really build both this higher touch but incredibly efficient go-to-market motion for mid-market. So lots of opportunity, really incredible solid foundation. And again, one of the things that I could not be more excited about is the permission, enthusiasm, and desire from all of our customers for us to solve this problem for them.
Great, thank you. Yes. Sorry, I can't see. Lightens. Yeah.
Hey, Sasan Brenthal with Jefferies. On international, your near-term and long-term aspirations, just like to hear how you think about this. And to get to 20%, would this be the fourth or fifth thing in that order when you gave us the three, or where do you rank this to get to that aspiration?
Yeah, I mean, again, I'll double team this with,
Yeah, let's do it.
with Sandeep. First of all, international, everything we talked about today is a global strategy, first and foremost. And in fact, what you saw up there with our platform, in the coming months, it's being launched outside of the US. And so first and foremost, every one of our bets are global bets. The second is we didn't talk about international because one of the lessons that we've learned is we want to deliver the proof points and then talk to you about it versus talk to you about what we're doing, and the proof points lag. And the thing that I have a lot of confidence in is we are truly thinking about our platform global first versus US first. We have the right talent in place that has built international businesses. And we have the proper focus by our product teams and by our commercial teams. So I have a lot of confidence in what's coming. A lot of it also is driven by the innovation that's coming with Mailchimp, because 50% of Mailchimp's revenue is also international. But I'd love for us to come back and share with you how much of the growth it's driving versus talking about it, which is why it wasn't part of the 3 that gets us to potentially 20% one day.
The only thing I would add is I think international is key to driving the 5 to 10% customer growth and unlocking the TAM. But when you look at our business, the opportunity we have to drive monetization, we have massive runway left in the United States to deliver accelerated growth. Platform adoption, we talked about 22 points higher adoption with QB Live. That could prove out a hypothesis as a discoverability issue, right? People are spending billions with third parties on offerings that we could solve for them, and they're like, oh, I didn't even know you could do that for me, right? So I see plenty of opportunity, and I think of international as a future accelerant, but the durability of growth, we got plenty of runway in the US, so I don't need to bank on international for that. Stefan?
Got 2 up here, and I'll come back in the back after this.
Great. Stefan Slowinski from BNP Paribas. Thanks as well for the presentations today. Sasan, I think you may have mentioned earlier about potential for other new monetization models. If you did or you didn't, if you could mention whether or not you do see that as possible. You have a lot of models already, but with AI, is there any more that you can do in terms of new formats of monetizing that? And kind of associated with that, just wondering if you could update us on any discussions with the US government around potential public-private partnerships and whether there's new potential revenue streams for Intuit coming out of that.
Sure.
Thank you.
Do you want to take the monetization? I'll take the US government.
Sure, absolutely. So the keys to monetizing with the customers is think about their workflows, right? They're coming in and getting their job done. And these are customers who are used to their workflows, and we need to break the inertia. So our first step in monetization was putting agents into the experiences. One of our strongest agents is an accounting agent. Someone sits down to do the work. They would have spent 50 minutes doing their books. Now an agent helps them get that done in 10 minutes. They're like, wow, there's massive benefit there. That breaks the inertia to go back to the lineup to say, what else is out there that I could look? That could drive upgrades, right? Our payment agent helping drive faster payments. Let me accept electronic payment. When we say, hey, you have 5 invoices late, would you like to send a reminder? They're like, of course. And we tell them, hey, customers like you, when they accept electronic payments, get paid 5 days faster. At that point, I'm not making a sale, I'm delivering a benefit. It drives better adoption. So upgrades, platform adoption, that's the key to monetization. Now, there are opportunities we continue to experiment with, which is a customer may not want to upgrade, but like, you know what, I'm happy with my SKU. Can I just buy agent X or agent Y? Alex and team are building more agentic experiences. So it's still early. It's a wide aperture, but just know that we are focused on delivering the benefit, unlocking our customers' productivity, which earns us multiple ways to monetize their productivity.
And your question about US government, what specifically is your question? Because you asked about monetization.
Potential for any new public-private partnerships that have been discussed more on the tax side, and whether those are new potential revenue opportunities for Intuit coming out of that.
Yeah, got it. Thank you for the question. So a couple of things I would say. We've been working very closely with Treasury and the IRS, and a couple of things that I would say they're focused on. One, first and foremost, their view is building tax software is a waste of money and then not the right investment. They're doing a study to confirm that that is ultimately not the best use of funds. They've already actually removed any of the employees that were working on what was direct file. So that's sort of one takeaway that you should have, which is the US government believes that there are plenty of companies commercially that build software. We don't need to be building software that's already free, provided by commercial entities. I would say the second and most important thing is we're collectively working with the government and private entities in terms of how do we continue to commercialize and amplify what's available for consumers. Because today, it's actually quite confusing. If you look at the Free File program, there's a lot of different commercial offers. They're all different principles, different standards, very confusing for consumers. And so we're working together in terms of like, how do you standardize that? Because if you just look at us as an example, in the last several years, 100 million customers have done their taxes for free. And so how do you amplify that even more so? That's the discussion and partnership that is in place. And I think you should expect some sort of a announcement in the October timeframe. But I think the takeaway should be government is eliminating waste. They don't want to build software. And two, they want private industry to work together to amplify the free that they already have. Yes.
Sasan, Mark Murphy with JP Morgan. Several of the large enterprise SaaS companies have started to disclose an AI contribution. They usually won't do that until it crosses above 100 million. And you'll look at it and you'll say, well, it's 0.25% of your revenue, or maybe 0.5% of your revenue. There's been a bit of a mixed response to that. And you've been very, I think, careful, not to embed AI contributions into the forecast, Sandeep. When you look at what what these other companies are disclosing, do you look at it and say, hey, it's impressive that that's something, crossing that 100 million, it's something we aspire to? Or are you in the camp that it's going to monetize faster in the SMB arena because, first of all, they don't have an IT department. They don't have to do any of the data integration. So they don't have the hurdles. And then you've got all the data kind of contained in one system. So it's more of a sort of a click and go.
Yeah, I love your question. The reason we don't separate out AI-driven revenue is the whole company, the whole platform is built on data and AI. And so when you look at TurboTax Live, it's $2 billion in revenue growing 47%. That is all data, AI, and HI. And when you look at all the innovation that you saw that we talked about today, it's all fueled by data and AI. So I think for us to try to break out what's AI-driven is a meaningless exercise because the whole company is fueled by data and AI. And based on everything we talked about today, we believe it is the fuel of driving future growth, whether it's adoption and consumption, whether it's fueling our growth in mid-market and or disrupting the entire assisted market of tax, bookkeeping, and accounting. So that's really, it's for very practical reasons that we don't break it out because a majority of what we deliver today is all fueled by AI. Both our revenue and all of our internal productivity, which turns into margin expansion.
And so for the specific agentic SKUs that have been rolled out recently, is that going to remain in that category of maybe kind of a non-disclosure?
Yeah, well, it's not a non-disclosure because let's take your example. When you look at our business platform lineup, we have agentic experiences across everything in the lineup. But we're also very intentional what agentic experiences we include in which lineup because of the cohort of the customers and their behaviors. While they have access to all the AI agents, they would have to upgrade to the next SKU. So the reason we don't break it out is because it's actually core to our lineup. So really the message I would leave you with is we don't contemplate internally, do we break it out or not? Will they find it impressive or not? It's actually, for us, it's not useful because everything that we're doing is driven by data, AI, and HI.
And to dimensionalize that a bit, Mark, think about the lineup we introduced in July. The primary change was the agentic experiences. And if you just take the pricing for value we did as part of embedding those agents into the lineup, the contribution was automatically higher than the numbers you mentioned that others are talking about. If you look at TurboTax Live, it's just the way we think about delivering customer benefit. That entire business, $2 billion, is AI and HI working seamlessly together. So to us, AI isn't a side thing we're adding our customers to think about and separately pay for us. It's just driving the entire workflow. So as Sasan mentioned, it's embedded in everything we do. So it's just hard to do a bunch of algebra to isolate it and make us all feel better with the contribution. But just know it's automatically higher than the numbers you just quoted.
Thank you. That's helpful right there.
Yeah.
Yes.
Taylor?
You know what? I'm gonna let you start.
Thanks, Kirk Minter with Evercore ISI. A lot of amazing innovation on display today, so it's great to see. I was wondering if you could talk a little bit about Mailchimp in the context of what you're doing with QuickBooks, meaning one of the real opportunities would seem to be to go up and help businesses, not only manage their finances, but grow. So what should we expect from Mailchimp in terms of the look and feel, integrating more into the look and feel of QuickBooks? And what is the opportunity to sort of cross-pollinate those from a go-to-market perspective? Because if I remember correctly, the ARPU uplift for Mailchimp is pretty significant relative to QuickBooks. So can you just give us a status and maybe what should we be watching for to hold you to account on Mailchimp maybe over the next, or what you're holding your team to account for over the next year?
Yeah, thank you for the question. I'll give you just a couple of headlines that I think answers your question. I would think about Mailchimp very similar to our journey in the last 10 years with payroll, payments, and now HI, which is our live experts in terms of the role that they play. And the role that they play, just as as a reminder, 10 years ago, payments was money was far smaller than it is today, and it was growing like 10%. Today, it's 1.4 billion, growing at 37%. Why? Because of the work that we did to really integrate it into the platform. Same thing applies to payroll, and same thing applies to why Live, both TurboTax Live and QuickBooks Live, are sort of a rocket ship. It's not because of what they do standalone. It's because of the power of all-in-one, integrating it, being at the moment of truth for customers. That's the same playbook because it's a customer-backed playbook on Mailchimp. And so there's a couple of things in context of the details that I thought Mariana did a very thoughtful job answering the question around what we're doing around product and or go-to-market that you should expect. One is the key elements of the engine around driving marketing capabilities, managing your customer hub is Mailchimp and will be Mailchimp and integrated into sort of one look and feel, which you saw today. And for the customer, it's seamless. So that's first and foremost. Two, Greg Johnson, our commercial leader, actually just put together the commercial team combining across sales and Mailchimp, across payments, payroll, Mailchimp, both marketing and sales, combining them and putting them in one group so that they are actually thinking about how to go to market holistically with a set of benefits, and that the sales folks can holistically be able to offer the platform. So you can, I think I'll end with where I started. Just like payments and payroll and our HI capabilities with Live, you can expect Mailchimp to be integrated fully. The key, which we'll continue to report out on, is, and that should accelerate the growth rate of Mailchimp, just like we did in payments, just like we did in payroll, just like we did with our Live. We expect the same from Mailchimp.
Let's go to Taylor in the white.
Yeah, hi. Thanks so much for taking the time today. You talked earlier about how internal AI efficiencies is central to margin expansion going forward. So could you maybe just talk about, as we look ahead, you've already had so much success to date, but where do you see the biggest opportunities? And as we think about, quantifying like what those cost savings could potentially look like, any color there? Is it really a function of headcount growth or anything else we should be keeping in mind?
Absolutely. So the project around rethinking how Intuit works using AI is one that Alex, our CTO, Carol, our CHRO, and myself are working across. And the stats I shared, those are early innings, right? I think there's much more opportunity for our developers to continue to get more productive. As we think about marketing organization, I see opportunity for us to continue to invest in even delivering faster cycle times, faster testing, delivering better targeting, better optimization of our campaigns. And customer success. If you think about AI, it's amazing rule-based stuff, right? And the way Sarah, Kim, and the team run that organization, AI is at the core of everything we do. Some of the stats they share with Sasan in terms of the efficiencies they're gaining that we learned from and then amplified across the entire company are mind-boggling, right? So that is a key area that I look at that's giving me the confidence on margin expansion. If we look at the 90 bips non-GAAP we delivered last year. On top of that, guiding for another strong 80 bips, which I think all of you were surprised by that we came out the gate with such a strong guide. That is driving the confidence, and I look forward to working across our organization to continue to unleash the productivity of our teams.
Alex, is there anything you would add connecting what you shared up on stage to what Sandeep just shared, just to maybe amplify the how?
Yeah, just to highlight one thing and emphasize one of the things Sandeep just brought up. So one of the big things that we learned in enabling amazing scale with the experts for TT Live and QB Live is that you have to track basically their work. What are they actually working on? And we track that in something we refer to as an engagement. And we know how long an engagement takes. We know what the pieces are. We know how long the pieces take. And what we've done is we've turned that towards our entire workforce. And we've said, well, what do marketers do? What do engineers do? What do finance people do? What does everyone do in their job? And how do we actually break them apart piece by piece and enable them to actually be much more efficient by replacing certain parts of their job with AI? And you saw the marketing example, where something that could easily take 2 or 3 weeks now can be done in 20 minutes. The last thing that I would add is that we're hyper-focused on identifying what are the friction points that exist in us delivering as an organization that we could completely change with AI. So, for example, are there certain meetings that we have that could be completely automated through AI? So instead of being, hey, I'm going to accept to attend this meeting or not attend this meeting, it could be, tell me what happened in this meeting, tell me if I got any action items, and then your agent goes and attends the meeting, it comes back to you, and you didn't have to attend the meeting, you're actually working. And so these are some of the things that we're working on, both that are role-specific and really across the organization, basically to completely change the way that we work with AI.
Thank you, Alex.
Let's go with the first gentleman, then go to the back. Yeah, just sequencing it. That's it.
Thanks very much. Appreciate you taking the question, and all of the great content is always very useful. Sandeep, on the TAM slide, if I look at the revenue share that Intuit is presenting, I think it's really just accounting and tax where you're showing up on that slide, and then the rest is still just meaningful market opportunity. There's probably close to 15 bars there. So maybe you can just give us a sense for how you prioritize which bar to go after. Is it the biggest TAM and you work down? Is there a sequence you expect customers to kind of start with and move towards? Yeah. And is the focus on agents and assist at all shift that in any way?
Yeah, great question. Were you asking of me or Sandeep? I don't want to.
Oh, both. We'll
both.
Both to answer.
The good news is both of our names start with an S.
That's right.
So it's a great question, and I think what's really important to call out are two things. One is what we talked about earlier, which is today businesses are completely over-digitized, and they're using a lot of different apps depending on their size to do pieces and parts of their business. An app for estimating and invoicing, an app for paying a bill, an app for reporting, an app for financial management, right? I could go on and on. And the biggest thing today is that their data is trapped in a bunch of different apps. They're spending a lot more time than they did even a year ago to try to understand what's going on in their business, and they're spending far more money than where they were just even a year ago. And so for us, it's customer back, and it's about winning as a platform. And so it's not about just what TAM is large. I mean, when you look at the spend of a business, they spend money on managing their employees, they spend money on AP and AR, they spend money on financial management, they spend money on getting the reporting and insights that they need, and they spend money on bookkeeping and tax and accounting. And today, we have all of the pieces and parts based on all the investments we've made in the last 6 years to truly have an all-in-one platform that's fueled by data, AI, and HI to do the work for them. And so that is what gives us a lot of confidence as we look at our growth formula looking ahead. It's actually why 10 years ago we were growing 8%, and today we're growing 16%, and we're 4 times the size. It's because of the fact that more so than ever, we have all the pieces in one place, and the customers are more ready than ever before. They want all of their stuff in one place so they can get to the insights to drive growth. And now that we've got all the parts and pieces to truly become the system of intelligence to do the work for the customers, that's why we have so much confidence about our growth formula going forward. And it's the question I answered earlier when Alex asked, well, we know what your guidance is, but your aspiration is 20%, how do you get to it? It's fueled by AI. It's how we then disrupt the assisted market, tax, bookkeeping, and accountant with our partners. And third, it's mid-market. But that's all fueled by having all the pieces and parts in one place.
Ryan Wallinger from Barclays. First of all, can I sign up for that agent with the meetings? That sounds like super useful.
We will still need you to come here in person. You can't send the agent.
My question is on international. We've been talking international for quite a few years now with you guys. I remember when you bought Mailchimp, that was kind of seen as a way to open up doors because they had more international exposure already. How do you think about that kind of journey there now? Is that kind of, are we waiting now for Mailchimp to come back and then international starts getting better again? Or like, how do you think about that journey? Thank you.
Yeah, may I start?
Oh yeah, go for it. Go.
So we're not waiting for Mailchimp. I think the key takeaway with international is what you saw up here today, we're launching outside of the US in the months to come. And that's really important from the perspective of helping customers manage their business, whether we've built the app or it's a partner, truly shifting from where we've been to a system of intelligence. Mailchimp is simply going to be an ignition for that acceleration of growth, but it's not dependent on Mailchimp. So one is just really building our platform globally versus just US and then over sequencing. The second, I don't want to overplay this too much, but it has a lot to do with it, which is just talent. The talent we've put in place, the focus that we have in place, we have a lot of confidence that in the future, it's going to be far more accretive than it is today. But I would just tell you, it's repeating what Sandeep said earlier, we're not talking that much about international, not because it's not important. We want to talk about it when it's actually accretive to growth. And we have so much opportunity across what we've talked about earlier today that international is important to us 5 years from now. It's not important relative to accelerating the company's growth. So for us, our mindset is less talk, more do, more points on the board, and then you'll be asking us how did we accelerate international, and that's the right time to talk about it.
And the small component is complementary, I'll add from my lens. International strategy for us is a mix of customer growth with this massive unlock there and healthy ARPC growth. So it has to be platform. Platforms are entire platform capabilities inclusive of Mailchimp. So that's how we think about it. And the team we have there, that's a mandate. Come back to us with a durable strategy that's going to grow not just customers, but also strong monetization. You want to call?
Oh, now he's putting it on me. Please, back there. Sorry, the light is in my eyes, so I can't see who's back there. I just see hands.
All good. Thanks, Assad. Brad Sills from Bank of America. Thanks again for hosting another great Analyst Day. Questions on mid-market, since it's such a key pillar of growth here for you. With IAS, I think the focus this past year was on selling into the existing QBO base. As you think about that TAM, I think the upmarket opportunity is probably more significant. So curious where your thinking is now. Are you looking back over the past year, what were some of the learnings now that you've had the product in market for a full year? Are you ready to kind of move into that upmarket segment of the business? And what changes might be required as you make that pivot?
I would call out, if I were to zoom out, a few big learnings that we've had that informs what we're doing now to accelerate in FY26. One is our sweet spot is customers with 10 million and over, particularly with Intuit Enterprise Suite. And so what we've learned is sort of the larger the customer, it's our sweet spot, which gives us a lot of confidence in terms of continuing to build out the platform so we can go well beyond the 100 million mark. Although revenue is not the only indication, it's the complexity of the business, but revenue is one way to talk about it. So that's one huge learning that we've had. The second one, which we've had this learning before, but now that we've have the platform and are really partnering with our accountants, we now see it at work in a very big way in mid-market, is accountants are such important partners of ours. And it's not only for us to help them digitize their firm, but to partner with them to serve these larger customers. And it's done right, it's to their benefit because of the reasons why you heard from Ashley, we win. We win on experience, we win on price, we win on total cost of ownership. and that makes the accountant look great, and it's great for the end client. So that's the second big learning, is that, that's why you see that, we have 2x the growth that's driven from accountants, because we're really building out a model that is important to be able to serve accountants. And again, although we said stay tuned, the accountant suite is going to help a lot with this. I would say the third big thing, which really Ashley has opened our eyes to, is she was very thoughtful in the way she answered the question. She was like, great platform, great sales team, but you're not doing any B2B marketing. Like, there's no awareness of what you do out there. And so that's the third thing that, that we've learned that we're doubling down on, which is B2B marketing, making sure that we have great leads for our sales folks so they can continue to be more productive rather than finding the leads, having the leads in their hands because of the work that marketing does. And I think last but not least, to put a fine point on the question that you asked, our base continues to be a massive opportunity for both emerging mid-market, which is QuickBooks Advanced, and Intuit Enterprise Suite, both of which comprise of our mid-market growth. But while our base continues to be the largest opportunity, and frankly, if we didn't do anything the next 5 years and just focus on our base, we could have a huge business here. But we are starting to put the right things in place to begin to hunt for new customers, because they're actually calling us. The word is getting out, and so if an RV park that just came, RV park management or wealth management or a construction company that was an existing customer that comes to Intuit Enterprise Suite, they rave about it, and then the next construction company that may be on outdated systems or a bunch of apps picks up the phone and calls us and says, hey, can we talk about Intuit Enterprise Suite? And so that's a motion that now we are building as we look ahead. Those are all the biggest insights and learnings that is informing everything that we are doing today.
Thanks very much. Scott Schneeberger from Oppenheimer. A couple tax questions. Sasan, the big, beautiful bill, it looks like it's going to add a lot of complexity, which do it for me, do it with me, seems like a great opportunity for you. Just, do you see it as a big tailwind? Is there anything we should consider negatively as well with that? And then the second one, Sandeep, when you were speaking, you stressed maintaining dollar market share in dollar share in DIY tax. There's a lot that goes into that equation, but I guess the free, how you're thinking about can permanent versus evolution. Thanks.
Why don't I take both of those, and then you and Mark
Please.
augment? Awesome. Let me start with the BBB Act, right? We think it is going to be tremendously helpful to the U.S. economy, but there is levels of complexity. Is this overtime paid deductible or not, or do I have to pay taxes to it or not? So we do think there is a high level of complexity, but it's not something we're necessarily banking on as we think about our guidance. So that's one way to think about it. The other thing to keep in mind with the One Big Beautiful Bill Act is that IRS typically opens on the last Monday of January, and there's a lot of complexity here, and if this bill could actually lead to the IRS potentially opening a little later, which could push revenue from Q2 to Q3. That's an area we have no insight about, early knowledge about, but just something that I want you to have on your radar once we get to Q2 and a guide towards Q2. Now, coming back to how we think about DIY and assisted. To us, it's all about growing our ecosystem of filers. And if you have a complex situation in your life, such as my eldest started attending college, I'll likely be an assisted customer this time because I have more questions. Next year, my life is going to be pretty much similar, status quo year over year. I might go back to being a DIY, and that's totally fine for us because we're maximizing the LTV of the customer. So that's kind of how we think about it. And when I stated our goal of continue to disrupt assisted tax, growing TurboTax Live 15 to 20, we also want to make sure that we don't take the eye off the ball of innovating on the DIY segment and making sure we're winning on DIY across all of the income bands that we've talked about in the past on our earnings calls. So that's the guidance we're putting out there, that continue to make progress assisted while we make sure that we don't lose and are maintaining our share on do it yourself on the dollar basis. Anything you'll add? Or?
Nope, perfect. Cash.
Let's go to Cash and then we'll come here.
Thank you. Excellent analyst day. I had two questions. I'll try to be brief as possible. One on AI, there's this view that foundation models can do everything. They're magical. The VCs posting all kinds of messages that SaaS CEOs under death watch, irrelevant business model. I mean, almost unbelievable. What is wrong when there's so much smart money behind that seemingly smart thinking? What could they be not factoring in with companies like Intuit that you're very strong, you've got a strong position? What is wrong with that thinking in the Valley? Number one. Number two, the delta between current growth rate, which is 16, which is very solid, and 20%, I could chalk it up to maybe online ecosystem grows a little faster. There was a target a few years ago that business would grow 30%. You could see a path to that, or you could see taxes do significantly better. But both are very different paths. One has some friction, and the other one has less friction. But the thinking is that we can still grow margins irrespective. So just wondering what your thoughts on both those questions. Thank you.
Yeah, sure. So I'll start with the first one, Kash, and I'll just share our belief versus comment on maybe the belief of others. And my belief is SaaS companies will either be disrupted or they will be disruptors. And over time, I don't think there's going to be much in the middle. And the reason that we believe that, I believe that, is because with what's possible with data and AI. Because with what's possible with data and AI, and you can't do anything with LLMs unless you have data. It's all about data. But with data, data services, which is about ingesting data that you don't have, and AI capabilities, what we are doing is building a system of intelligence, which is a learning system that will do whatever the customer needs it to do in just give us a prompt of what you need and we'll do it for you, which is what you saw us demoing today. And so that's what we've been building for the last 6 years. It's why we bet the company on data and AI. Many, at the time in which we declared this, weren't even listening to us. We have 6 years of building data services, AI capabilities, and a system to do the work for customers. And our strength is the data ingestion, and all the AI capabilities to be a system of intelligence, which is why structurally our growth rate is profoundly different today than just 10 years ago. 8% growth at $5 billion, $20 billion growing 16%. And we have a lot of confidence, based on all the proof points that you saw, that our best years are ahead of us. And frankly, we don't think about things in years. We think about them in hours, days, and weeks, because that's how fast we are moving. So that's what gives us confidence. I do believe that if you are fundamentally not focused on data models, data services, and AI to build learning systems that become the system of intelligence, you can get disrupted. LLMs by themselves are not magical. It's all the things that I just mentioned, the domain expertise that ultimately comes with it. So that's the first question that I think you asked. I mean, the second one is, maybe it's a repeat, but when you look at all of our innovation with what's possible now with AI and HI, you add to that a $2 billion, I mean, how many $2 billion businesses do you know that are growing 47%? That's TurboTax Live. We believe we're just scratching the surface. And you maintain that, plus you maintain 40% in mid-market, which is all fueled by the same platform capabilities. These are not different businesses. These are all, it's one platform, one data lake, data services that ingest data, similar data models, and then AI capabilities that's fueling these three areas. I think we can accelerate the growth rate of the company, but we'd rather guide the way we do and deliver high say do than otherwise. So that's the way we think about it.
Should we go up here? Tatiana up here, and then those two gentlemen back there after that.
Hi, Ben Solak from FM Investments. I'm just curious on that AI agents you guys were talking about. You know, this person had to input their data 7 times before it was across all their different apps. So I'm curious what kind of structural advantage you guys have to say, instead of a third-party app coming in and taking all of that data, you have Intuit's app using the data that they're putting in into all the other systems.
I'm going to let Alex answer that question because it's all about how we've built our platform capability.
Yeah, the structural advantage we have is that once you enter the data once inside of our platform, it's immediately available everywhere across the platform. So even in the scenarios where you have a customer who may be using another provider to pay bills or to collect payments, we can actually, for lack of a better word, simulate what that would look like on our platform. We could show it to them because we already have their data. So we've made significant investments in our data in capabilities, these data services that Sasan was referring to. So we can basically go get data from anywhere. So it can be data where we call an API and go get the data. It could be data that is sitting inside of an email app like Gmail. We can go get the data, extract the attachments, take the data off of it. We can upload pictures of documents. Somebody can scratch a note on a piece of paper that's an estimate and take a picture of it and send it to us. So our structural advantage is that, as Sasan has been saying, so we've invested so much in being good at data, the data models, going and getting new data, that now what we can do is, instead of the customer having to manually enter it in these different places, it just immediately shows up in our version.
Looks like we are out of time. First of all, thank you for all the questions in the room. Thank you for everybody on the webcast that has joined us. I just want to maybe wrap and end with where we started. Our posture is very different today versus even a year ago because we have put together all of the pieces and the parts to be able to truly be an all-in-one platform that's the system of intelligence for customers that does all of the work for them, disrupting the business logic layer, the workflows and apps, and ultimately becoming the place where, based on data models, HI, and AI, we can do everything for our customers. And so we're very excited about the foundation that we have. We are very hungry and bullish about what's possible, and we look forward to talking about the amazing benefits we're delivering for customers and our results going forward. I think that will bring us to a close for the webcast. For everybody in the room, we are going to dart upstairs where there's going to be amazing food, and the leadership team will be up there, and you can mingle with anyone that you would like. So see you up there in a few minutes. Thank you.
Thank you all.